Good morning from Cornell University, upstate New York in Ithaca. On behalf of the Emerging Markets Institute and eCornell, welcome to the webinar, The Race for Central Bank Digital Currency Adoption and Emerging Markets Perspective. My name is Lourdes Casanova, and I am the Gail and Rob Cañizares Director of the Emerging Markets Institute. Central bank digital currencies refers to a digital form of a country's currency. They are issued and regulated by the country's central bank. While the European Parliament has just issued a report under the title, which is very telling, Digital Euro, when in doubt, abstain. Many countries, mainly in emerging markets, have issued central bank digital currencies, a total of 100, that they are in various stages. We have Nigeria with the Naira, that was the first one to fully launch a central bank digital currency, the Bahamian Sand Dollar, and Jamaica Jamdex. These are linked to their currencies. So the value of the central bank digital currency linked to the value of the currency. But earlier this week, Zimbabwe, the Central Bank of Zimbabwe, launched a currency, RBC, and because of the volatility of their own currency, they have linked the RBZ to the gold. So in all these countries, the motivation was financial inclusion and a solution to very volatile currencies. And then we have the case of China that launched on a research basis, on a pilot basis in 2020, the eCNI that was pegged to the renminbi. And currently, about 260 million Chinese citizens are using it, and is also used and controlled by 7 commercial banks. Also, China offered this e-yuan to the athletes in the Winter Olympics in February 2022. So what are the consequences, the far-reaching consequences of this central bank digital currency? We have today a great panel of experts with my colleague, Anne Miru, Faculty Fellow at the Emerging Markets Institute, Mark Mobius, founder of Mobius Partners, John Ninia, analyst at MasterCard, and Adeolu Fadele, who is the project manager of Project Giant, the eNaira project at the Central Bank of Nigeria. Their experience and expertise surrounding this topic will provide a great discussion about the present and the future of central bank digital currencies and how they will help developing the emerging markets. So I'm going to pass the word to my colleague, Anne Miru. Anne?
Yes, thank you very much, Lourdes, and I'm happy to be participating in this webinar and to be able to discuss with practitioners, in particular somebody from the Central Bank of Nigeria, about this key question of central bank digital currencies. The first thing is that, as I'm going to briefly set the stage, and I will let Mark, John, and Adeolu talk about their real experience. But the first thing is that these are really the early days for the central bank digital currencies, the CBDCs. And actually, we don't really know how far and how fast they will go. What has been the context of the development? First, the fast digitalization of the past decade, or even we could say the past 5 years. The boom of digital payments, especially in emerging markets, with, for instance, which I pay or we pay from Tencent, or Jumia Pay from Jumia in Africa. the development of crypto assets. So it's an environment which is a basic and a kind of wake-up call for a number of countries, which has been the announcement at the time by Facebook and now Meta in 2019 that they were going to launch their own currencies or their own digital asset, if you want. So that was some sort of a wake-up call for a number of central banks. And now, where do we stand? Lourdes mentioned it. There are more than 100 countries which are exploring the use of central bank digital currencies. De facto, as she mentioned, we had at least up to April 2023, 11 countries which de facto had really launched it, among which a big economy, Nigeria, a medium-sized or small economy, Jamaica, and other smaller countries like the Bahamas or the country of the Eastern Caribbean central banks. So, except for perhaps Jamaica and Nigeria, which are definitely Nigeria, which are a bigger size, the launch was for much smaller scope, if you want, or in terms of proportion. And the technology aspect and the interoperability of the system has not been in a way neglected, and there may be also an issue to be solved definitely at some point. But we have a number of, what's very interesting is that even now in some developed region, the CBDC are being considered. But the first thing to consider is right now, 3/4 of the members of the G20 are exploring and in advanced stage of exploration of CBDCs. And among these, you have Korea, you have Saudi Arabia, you have South Africa, but you have India with 1.5 billion people, and you have China that Lourdes mentioned a moment ago. The US is considering it. The EU is also pondering with perhaps some number of hesitation for some reasons that I will mention in a moment. Why CBDCs, and perhaps why more in emerging economies than in advanced economies? So largely it's related to the policy goals of the governments. The first one already mentioned is financial inclusion. And I'm sure Adeolu will, I hope we'll talk about that because this seems to be a key aspect for the governments. Financial inclusion, which is very much also part of policies to reduce poverty. The second one is making payments more efficient. Because in a number of countries, existing digital payment systems are still relatively expensive. So CBDC could be, well, potentially a tool to offer digital forms of payment which could be cheaper to operate, especially if they are operated by central bank, which presumably are less of a profit-oriented nature of institutions, and they could potentially offer low-cost payments. But then the issue is that how do you ensure all the expenses which are required for the maintenance and also the technology which is behind the CBDCs? The third element is for launching CBDCs, and that is also more particularly prevalent is where there is a concentration of already provider of digital payment system, and I'm thinking of China, is trying, to counter the emergence of monopolies. And by the way, the Chinese government has said that is putting forward the CYuan in a way to complement or perhaps to counter the Alipay or Tenpay or WeChat Pay of the countries. I mean, that's the issue which is put forward. There is also, in the opinion of a number of experts, is that because those digital payments provider were doing some activity related to banking, such as providing some loans and infringing upon the territory of traditional banks, if you want. So this still, it's an important element. Fourth, reducing illicit use of money because cash disappears. But then you have also the aspect of privacy, which I'll come back in a moment. So there are a number of policy goals which partly explain why it is emerging so much or so much faster in emerging and developing economies than in advanced economies, because also there is a void there. Now, that being said, what are the challenges? So the objectives are there. There are a number of possibilities offered by CBDC, but there are challenges. And I'm sure that Mark and John and Adeolu will talk about that. Some are of an operational nature. It's related, as I mentioned a moment ago, the technology, the choice of the technology, the level of infrastructure, the legal and regulatory framework, which may be necessary, so they are operationals. But there are also two challenges that I would like to highlight. And the first one is the risk of disintermediation. That is, there is a danger of a run away from the banking system to deposits under the CBDC and central bank umbrella. This is perhaps a theoretical risk, but it has to be taken into account. There are ways to deal with that, and we could discuss that later on, but it does exist. Even if CBDCs are not spreading as fast, what does it mean for the banking system? This is a key question. That's the first one. And if the disintermediation from banks is large, it has an impact on monetary policy. So this is a serious issue to be dealt with. And the other one, which is mentioned not that often, but in my view is also very important, is the one related to surveillance. And it goes beyond privacy, because data collection is already made by payment system in China. Actually, that another argument of the Chinese government. But if you have an authoritarian government which use a digital version of central bank money to surveil its population, what do you do? Because through central bank digital currencies, you can orient a particular policy, a social policies, for good or bad reasons. So this is a key question which has been touched upon in some publication by international organizations like the IMF or UNCTAD, but also raises major questions. So bottom line, there are a lot of promises. They will need to be, implemented or come to fruition. The example of Nigeria will be very, very interesting. But there are technical questions and regulatory questions for the users and the policymakers. And I'll stop there.
So, Mark, the word is yours.
Thank you for that introduction, a very good comprehensive look at what's happening in the area of central bank digital currencies. John Nania, who I'll introduce in a little while, and I visited Jamaica to learn about one of the earliest of the digital currencies. In the case of Jamaica, it's called Jamdex. And when we arrived at Kingston Airport, we stepped into a cab. And of course, the first question we asked the cab driver, what do you think about central bank issuing a digital currency? He said, I don't trust them. They're going to learn too much about what I do with my money. So we had a very bad start to the digital currency exploration that we were doing. Then when we tried to get a personal meeting with the people at the central bank, particularly the deputy director, Natalie Haynes, who was in charge of the effort, they turned us down. They said they didn't want to have a personal meeting. But we eventually got a phone meeting with Natalie and her associates, Maria Griffiths and Novelette Patton. And the conversation went fairly well, but they were clearly very guarded about what was happening. And at first, the question we asked was, what's happening to the project? And they said, well, the project is fully functional, but it's still in a nascent stage, which indicated that they hadn't been entirely successful in getting this thing moving. Then the next question we asked was, well, how are you distributing this digital currency? Are you doing it directly? And they said, no, we have providers that will will open a wallet for the individuals who want to have the digital currencies. And they said currently there's only one provider that has been involved in distribution of their GemDex. So that again indicated perhaps there was some resistance on the part of the banks, although they did say that they were going to get the banks involved as distributor. But I had the impression that it was not a bank, but it was a finance company that was doing the distribution at this stage. And of course, they said that all merchants and commercial banks are eligible to distribute the currency to the consumers. And when we asked about the amount that was distributed, they said there was no limit to how much GemDex could be issued. However, it's a replacement for the printed money. So obviously what they're doing is saying, okay, if we have printed money of certain amounts, we will not issue that if we're going to be issuing the digital currency. So that answers the question about how much will be distributed, and also answers the question as to whether maybe too much will be distributed and it will become a money supply bonanza. So when we looked at the entire situation, we asked about the education of people in the country about CBDCs and in particular GemDex. And they said that at the beginning it was very difficult. That was about 2 years ago, but now it's gotten a little better. And the government will use GemDex in order to sort of promote the digital currency. And they will use the GemDex as a way to facilitate payments to citizens, employees, and eventually to pay taxes. So that would probably be a way to kind of force people to use the digital currency. But at this stage of the game, most people, they said, are unfamiliar with it, and there's going to be a lot of education that has to be done. One of the interesting aspects of the conversation surrounded the remittance of dollars. As you know, a lot of Jamaicans working overseas remit dollars home to Jamaica, and they said GemDex could be used to buy US dollars, which was an interesting aspect, and that would be in some ways a very convenient thing for people overseas that want to send money home. So at this stage of the game, the general impression is that we're, as they said, in the nascent stage, and it will probably take quite a while of education and, of course, allaying the fears of people that their privacy will be conflicted as a result of this. But let me turn it over to John Nania, who can give you a little more insight into what we learned. John?
Definitely. Thank you for the introduction, Mark. So yeah, as Mark mentioned, the fact that GemDex is capable of buying US dollars is a huge plus for people within the country, because typically with a lot of these emerging markets, sometimes having access to foreign exchange and getting money out of the country can be quite difficult. But it seems that GemDex is actually facilitating this movement of money outside of the country. So it can actually be even more beneficial for people that are looking for investment opportunities within the region. And something else that I thought was interesting was, you know, as Mark said, this currency is still very early on in its stages. And one example of this would be when we asked them about how the currency could be used to actually facilitate payments through service providers. This was something that they're still working on. So as of right now, the GemDex currency can only be used as like a peer-to-peer payment system where you can send money to a different person. But if you actually are going to your phone and you open up Uber and you want to order a taxi, as of right now, it's not possible to use the GemDex currency for that. Or to purchase something on Amazon, you would still need to use a credit card or some alternative method. So I think that this is a pretty big issue facing the digital currency because they need to find ways in which consumers can actually use this currency to purchase goods, not just to send payments to one another. So I think that, as this project continues to age and consumers begin to pick up on its use cases, I think that they'll have to implement some of these uh, e-commerce and digital service providers and allow them to facilitate payments through the Jamdex currency. And another thing that makes Jamdex particularly unique is the fact that they chose not to integrate blockchain technology into the currency. So with a lot of these upcoming digital currencies around the world, a lot of these currencies are using blockchain technology. However, with the Jamdex specifically, they chose not to use blockchain. That being said, they did allow individual wallet providers to integrate blockchain solutions as a layer on top of the currency that exists. But I just found it interesting that they chose a different approach in the way in which the CBDC transactions will be reported. In addition, I think that Mark already talked about this, but I think that another real use case for the Jamdex will be not only for these peer-to-peer payments, but also the fact that they're looking to use the Jamdex as a way for citizens to pay taxes to the government. I think that this will give the currency a lot more legitimacy within the country because, as you can see with the taxi driver that originally picked us up from the airport, there's a lot of mistrust in the digital currency, which to me is very interesting because a lot of these people question, how can they make this digital currency? They're just printing it out of thin air, but there's really no difference with the same fiat currency that they're issuing. I mean, both of them are just printed out of thin air at the end of the day. So just the only difference is that this currency is digital. There's no paper or coins behind it. So I definitely think that, over time, once more people start to realize the ease of use between these digital currencies and also the ease of exchanging the currency into US dollars and other forms of payment, it will be inevitable that people begin to adopt this CBDC for peer-to-peer and even e-commerce payments once it's available to consumers within Jamaica.
Thank you very
Next,
much, Mark and John.
Adelu,
Yeah.
Thank you, John.
and he's going to share some words on his view of central bank and digital currencies.
Okay, thank you, John. Okay, so good morning, everyone. And I think a lot have been said about CBDC, and I'm just going to be adding my own thoughts to there's so much that have been said. And I just want to say that this is one of the most interesting topics that we could be discussing today, especially as it has to do with the future of money. And anytime you're taking a look into the future, the future can always prove you wrong to a particular degree or to an extent. So the question is, how much of the future can we understand from where we stand today? And what can we see? And I like to use a very interesting analogy of an elephant. So I tell you the future is an elephant. And depending on where you stand, you could actually be seeing a different thing from what I see. And notwithstanding, it is the visionaries, it is the courageous that looks into the future, and the future is worth discussing at all times. And when it comes to CBDC, I'll tell you that it's a concept that, depending on how you look at it, your judgment and your perception may be different. I mean, if you're taking if you're putting yourself in the far future and you're looking back at what CBDC could do, then you might be seeing 100% reasons why a CBDC is urgently needed. But if you're looking at where we stand today, or looking at the status quo, it might be difficult to actually see why we need a CBDC. But I'll just tell you that the concept of money and payments is such one that is always evolving, is always changing. And just like the future, I mean, you could predict what will happen, but because there are different ways things could go. When it comes to talking about the future, then you could be wrong, you could be right. Then and to a particular degree, when we looking at money, the popular story about money, the evolution of money, starting from barter system to the use of cowries, to the use of grains. There's hardly something you can think of that has not been used as money in the past. And today, I mean, we have electronic money, we have fast payments, and in addition to that, we have the digital currency. So now we're talking about the central bank digital currency. The question is why? And a lot of these answers have been provided. But just to add my voice, we know that life has gone digital, and the pace of technology advancement has made it so rapid that it's almost impossible to live today without having a touch point with digital platforms or digital services. And in addition to that, COVID has actually come to accelerate the pace of digitization. Countries have started to build what we call digital economy, because it has proven to be a huge potential source of revenue for countries. And in addition to that, you have the private digital currencies. I mean, the cryptocurrencies, I mean, which is one of the most popular, and most of the audience today are very familiar with Bitcoin, and it will come up in our conversation as we go on. Let's talk about the central bank digital currency specifically. And every time we move an inch, I will always remind you that we're standing where we're standing today, and then we are looking and examining the future, which is an elephant. And depending on where you stand, you could see a snake. If you are touching the trunk, if you are touching the tusk, you could see a spear. You could see a wall, or a tree, a rope, or even a fan. If you're touching the air, it depends on where you are standing. But let's think about let's look at what the financial institutions are saying about CBDC, and especially the Bank of International Settlements. And a quote from Augustine Castings, who is the general manager at the BIS, says that the goal is to build a future monetary system that is adaptable and that enables innovation by private sector in a safe and sound way, in whichever form it may come. Okay, so there's the concept of the future monetary system that is being built, because it is obvious that the future is at us, and a lot have to change. So the central banks and the financial institutions generally have actually challenged themselves and decided to take giant stride and courageous steps to start building the future monetary system. But, you know, depending on how you are building it, that may also affect the outcome. Now, when you look at digital currency generally, we have talked about cryptocurrency, but you could put them in two buckets. You could see the private digital currency as one bucket, and then you could see the public, which is the central bank digital currency, which is a legal tender. So this is just to say that we have different forms of money, but of course, it's transparent to the public that there is something called central bank money and another one called commercial bank money and the rest of them. But this is meant to be transparent. This is meant to work seamlessly. So that's a success in itself. But as you move forward, the question of what's the difference between these different types of money? Basically, you can look at it from three angles: the issuance, the legislation behind it, and the liability. I mean, who is liable for the money? First of all, the issuance. If you look at the central bank, what we call the central bank digital currency, it's issued by the central bank, and that's just to mention that not all money are issued by the central bank, and then it's backed by the law, which makes it a legal tender. Then it's a liability of the central banks of every country, which means that the central bank will always guarantee anyone holding this money the value. Now, CBDC in itself can be put in two major forms or types, which is the retail and the wholesale CBDC. And one interesting trend is that the retail CBDC, which is the type of CBDC that is accessible to the general public, it seems to be more popular among the emerging economies. Since we are talking about, we are talking to the Cornell Institute of Emerging Economies. So the retail CBDC seems to be popular among the emerging economy, and there are reasons for that. That's because it could solve a lot of potential existing pain points. Yes, and a lot of them has been mentioned, including financial inclusion. But when you look at the wholesale CBDC, you will see that the advanced economies are experimenting more around the wholesale CBDC and the cross-border CBDC. There are too many benefits and motivations to have a central bank digital currency. And I mean, a lot of them has been mentioned. I mean, we could mention a few: efficient payment system. It could increase revenue for governments. It could enhance monetary policy. It could make the financial system safer. It could deepen financial inclusion. It could reduce it could reduce the risk of private digital currency. It saves costs, discourage money laundering, and it could stimulate economic growth and promote cross-border payments, improve local currency traction, and the rest of them, just to mention a few. So in all this, a lot have been said, and you know, we are in the early stage of these concepts, and we are just examining what an elephant is actually. So imagine that we are all blind. I mean, we have a blindfold on our eyes, and we are using our hand to examine what is this elephant, what is this thing that I am touching. So that's exactly what is happening now. Depending on how you are approaching the design, or how a country is designing a central bank digital currency, the outcome could vary. I mean, what you get could vary. And that's why we have what we call the country experience. We have the country experience. Some things has been said about Jamaica, and I'm also going to share some things, some experience about Nigeria. The China experience is also unique, and so just to take a little peek into how a CBDC is designed, it really involves balancing a lot of competing objectives. I'll say that it's a very courageous endeavor. I can even call it an adventure, which means I give kudos to those countries who are taking a stab at it, and especially the ones that are going ahead to launch, to have a live deployment, because it's really a lot of lessons to learn, and that can take us to the question of the risk involved. And I just mentioned the fact that it's really about balancing a lot of competing objectives when you are designing the CBDC for your country, and you need to approach this with the full knowledge, a good knowledge of the risk that a CBDC will crystallize. And the biggest one is actually the disintermediation of the banking system, which speaks directly to financial stability. I mean, basically saying that CBDC could disrupt the status quo in the financial architecture. But it's one way of saying it, to say that this is a risk from CBDC, but I actually see the other way around. What I see is the fact that fintech and even private digital currency like cryptocurrency are already going to disrupt the status quo. But CBDC can be seen as a risk management tool. Other risk that will come from CBDC is the risk of technology exposure, some regulatory over-regulation, or the risk of privacy, and many that has been mentioned here. I think because of the variance in the need of different countries, the best that the central bank community could do is to agree on the foundation principles. So talking about designing a central bank digital currency and calibrating them and recalibrating them to produce desired outcomes. There are foundational principles that has been agreed upon, and there are 3 in number. They are the pillars that is meant to generally guide the countries, and one of them is financial stability. Is to say, whatever you do, please don't hurt financial stability. The second is interoperability, and countries should issue the CBDC to complement existing forms of money, not necessarily to replace them. And the final one is innovation. So you could actually see that some countries, like Nigeria, is a blockchain-based CBDC. The implementation of Nigeria CBDC is blockchain-based, and that innovation, that 3rd pillar, which is innovation, could be one of the reasons why that is also important. So I think talking about the Nigeria specific experience, we have a slogan that we use a lot for simplicity. We tell everyone this is same naira, more possibilities. So e-naira is actually the same naira, more possibilities. And that is to say that it's just the digital version of the cash that we used to know. And nothing much is going to change except for the benefits that we're going to reap from having a central bank digital currency. For Nigeria, the journey started we started the journey far back as year 2017, where we started conducting research, and the e-naira was eventually launched in October 25, 2021. And since then, the project is Project Giants, and the objectives are basically financial inclusion, enhance monetary policy, improve remittance, growth in cross-border trade, and empowerment and poverty reduction. So some of the expected benefits is to improve availability and usability of the central bank money, as we say it. So support payment system resilience, to reduce cost of process of managing cash, and also to enable improve welfare disbursements to citizens in form of government intervention, and also cross-border trade and diaspora remittances. So there's a lot that has happened, but e-naira has been designed to address the risk that already exists. That's why the design attributes or the design characteristics of e-naira are specifically targeted at ensuring that these three pillars are properly managed, which is stability, and then the complementing the existing system, and then ensuring that innovation is powered. Legal tender, e-naira is, as we say, it is, the same naira. So it's the legal tender. It has the same parity of value like any other CBDC. Is not to be compared with private digital currencies, because this is a legal tender. The design of e-naira it takes a two-tier architecture approach. And that's for financial stability, which actually complement or let me say reinforces the existing financial system architecture, where the central bank issues the money, and the intermediaries, the licensed and regulated intermediaries like the commercial banks, actually distribute to the general public. So what we're saying is that the risk of disintermediation is embedded into the fabric of e-naira, and that's why the commercial banks are involved to a very great extent. So e-naira was introduced as part of managing the risk that's known, to manage micropayments. So there are other factors in Nigeria that we see in Nigeria that is inducing inflation, because the small and low denominations don't seem to be available. So people do rounding effects, where you could to buy a chocolate, because of the lack of small denomination, people round off the figure, and that's passively pushes inflation. And it's actually designed to be used for low value everyday life and general usage. not necessarily to compete with bank deposits, and it's also introduced to catalyze digital economy in Nigeria. So it's important for Nigeria because the government of Nigeria has indicated interest to pursue or to build digital economy aggressively. And if you have taken a look at some things about Nigeria online, you will notice that Nigeria is one of the lovers of new technology like blockchain. And we have, a national policy on blockchain has just been released to encourage government institutions to adopt and start using blockchain. So there is a network effect and a multiplier effect that is going to come out of this, because to build a digital economy, you will need a digital currency. And I just want to mention this before, in case I may forget, that the fact that if we are still wondering why a CBDC is needed, I will say that for central banks, we are already thinking in the future when machine-to-machine payments, IoT, Internet of Things, when Internet of Things become a commonplace and machines can open a bank account and also make payments, how will the central bank be managing that? And so we are taking giant step into the future, and we are demystifying what the elephant should look like. So
thank you. Thank you.
Okay, so I think my time is up. I'm going to round up. Is that?
Yes.
Is the time? Okay, good.
Yeah.
Okay, good. So a lot has been learned, but some of the lessons that are learned are actually being harnessed for pushing forward. In the case of Nigeria into the future, and Nigeria is very confident and I'm very optimistic about the role CBDC will play in the future of digital economy in Nigeria. Thank you.
Thank you very much. Let's move to the questions. There are many questions from the audience. Ravin, please go ahead.
Great. Thank you, Lourdes, and thank you to all of our speakers today for this great conversation. Our first question is regarding the cost of CBDCs and its implementation. So this is for anyone on the floor. On average, how expensive is the development and research going into CBDCs, and is it going to be sustainable going forward?
It's an interesting point. Good question, because we noticed in Jamaica that they were working with about 3 software firms from outside Jamaica, and they apparently were spending a considerable amount of money to get the software correct and do the right thing. I've forgotten the exact numbers, but it was not small. Do you remember, John, what the amount was? It must have been a few million that they spent on developing this. But I don't have the exact number, but they certainly had to reach out to independent software companies to do the work to set up this the Jamindex that they did. So I think it's a very important question, because it's not going to be cheap to do something like this.
Thank you, Mark. Our next question has to do with trade. So how do you think CBDCs can be used for imports and exports, whether from the government side or from the merchant side? Again, this is open to anyone.
I think I can answer that. Well, as we were talking about Jamindex, they really implemented the ease of exchanging Jamindex for local USD. So I think that this is a sign that these CBDCs are not really targeting domestic payment transfers. They really have a vision to become more global and to try to facilitate trade across borders, and especially remittances across borders. There's so many intermediaries, such as like Web Union and TransferWise, that all take fees and different cuts within the whole exchanging the currency, sending it abroad. But CBDCs and actually even crypto in general is really going to attack this industry because they want to facilitate cheap, instant transfers abroad. And this would make things a lot easier. And also one other example was actually just this morning, Mark and I had breakfast with this gentleman who is looking towards developing a way in which they can use the digital yuan that China is working with to facilitate app store payments. So they're looking at ways in which they can attack, Apple's monopoly on the App Store, and all payments have to go through Apple. Apple takes a cut. They're trying to make a way in which you can actually use the Chinese digital currency to purchase different apps and different in-game items and purchases for your accounts. So this really shows that digital currencies really are targeting a global market and not just domestic payment transfers.
Okay, thank you. I think I like to add to that. I think cross-border trade is one clear area where the value proposition of central bank digital currency is very obvious, and that's because today cross-border trade and payments is characterized with a lot of pain points. I mean, considering the time zone, the business hours, considering the cost of even sending money across border, considering the different AML policies, regulatory.
Okay, I think, why don't we go ahead with the next question, because there is a problem with the internet connection. Ravin, please, next question. We have only 8 minutes left.
Great. So the next question has to do with financial inclusion. A lot of developing countries have energy, infrastructure, mobile phone stability issues, low internet penetration, and other problems that adds more complex strands to the lack of financial inclusion. So how are CBDCs addressing it? Are they going to be hindered by the lack of strong infrastructure? What's your take on that?
It's interesting to look at the case of Kenya with the M-Pesa system. As you know, there people with very simple phones, not even iPhones, no smartphones, can make transfers by depositing money with some retailer and then giving a code to whoever they want to transfer the money to, and that person can go to another shop with that code. With a central bank digital currency, that process could be streamlined. It might work very well in that kind of environment. So I think this is one example of where it could be quite facilitated for the man on the street, so to speak.
Yeah, and also in Kenya, they are seeing how to integrate the currency, the peso, whatever, in Kenya. They are going to integrate in the M-Pesa. So that's the idea. And also there are plenty of technologies that allow these transfers with no internet connection or even no telco connection. So there are ways to find to facilitate these transfers in environments where infrastructure is not great.
Great, thank you, Lourdes. And just one last question to everyone. What, generally speaking, do you think are the most prevalent economic pressures that can hurt the adoption of CBDCs?
It's a very interesting question, because probably the biggest economic pressure would be the existence of cryptocurrencies, Bitcoin and all the other cryptocurrencies, which actually will be competing in some ways with the CBDCs. So this is something we have to look at very carefully.
It's not a coincidence that often when governments launch CBDCs, they ban cryptos. They want to do it on their own without cryptos. And it's not the case in Nigeria, where you have both. But governments will have a hard time giving up their enormous power they have by controlling their own currencies, for better and for worse. So remains to be seen, but definitely also there is resistance from the current banking system, because as very well Adeolu said, there is this intermediation, and also Anne mentioned that, there is this intermediation, and the role of the banking sector will change. We don't know how it will go, but it will change with central bank digital currency. So there is resistance from within.
And yeah, and I would say, it's no surprise, and it looks a little bit like, at least in advanced economy, because there is a difference between the emerging economies and the advanced one. In the emerging economy, there was a real need, in a way. In advanced economy, it looks a little bit as if, perhaps the case of China is a little bit special, as a kind of reaction, because you cannot ignore the trend, so you have to be part of it, and you have to react, so that, and to prepare your reactions. Otherwise, you are faced with the cryptocurrencies or the powers of, like in China, the WeChat Pay or the Alipay, which in themselves may eventually represent a very, very strong economic force. So it also, there is a very strong aspect. We have to react, and we have to be present in that particular sphere, if you want.
So financial inclusion is one clear trend for the emerging economy, where if you have a significant portion of your population that is outside the formal financial system, that is an evidence that the potential, the economic potential of that country has not been maximized. I just want to add that.
Thank you. Yeah.
Thank you. Yeah, thank you so much.
Very much. Yeah, so thank you very much. Time is up. I wanted to thank very much Anne Miru, Mark Mobius, John Ninia, and Adeolu Fadel from Nigeria too, for this very rich discussion. As Anne mentioned, and all of you, this is nascent. This is going to be the subject of many more webinars, panels, research papers, because we are in a pivotal moment in the use of money, and this trend will not stop. And what is interesting is that this trend is led by emerging markets. As the report of the European Parliament said, Europe is fine, so why to bother? Be prepared, but don't bother the system. So we see this innovation coming from emerging markets. And I thank you again, Nicolas and Marcos from the Cornell team. A pleasure working together and looking forward to many more. This one will be the end of the session for EMI webinars, and we'll meet again at the end of the summer. So thank you very much. Very interesting discussion on a very innovative topic, and that is again led by emerging markets. Thank you all.
Thank you.
Thank you.